let's get in a view from Dhananjay Sinha now. He is head of research, economist and strategist with Emkay Global Financial Services. He is joining us right now. Dhananjay, good morning. Good to have you with us here. Thanks very much. Let's make it a rapid fire, quick questions, quick answers, Dhananjay. What should we expect from the budget?
Yep. So, as I've written and told earlier, so we are looking at a scenario where the fiscal construct should be more on the expansionary side, and I think in the context that you have a drag on growth till now, both with respect to overall growth and also with respect to corporate performance. I think that and also the context that you have several state elections coming up, the government would be on the expansionary side, and we have Arvind Subramaniam already creating a justification for that. So I think I see government leaning towards that.
Breaching the deficit of 3.5, expanding it?
Yeah, I see as far as our estimates are concerned, a more realistic number would be more in the region of 4 to 4.3%. So in FY16 you have one factor that is playing out is that your nominal GDP will be much lower than what the government had or the budget had assumed earlier on, in the region of 11.5 to 12%. So nominal GDP is likely to be much lower in the region of let's say somewhere around 8.5%. So that itself boosts or creates an upside bias to the fiscal deficit to GDP ratio. Going forward, we think that you have this seventh pay commission that is there, you have OROP, and you will also see higher allocation with respect to rural maybe and agriculture sector in particular, and there could be other expansionary measures that the government could make to boost aggregate demand. So I think so on a realistic basis, it's likely that the government will be on the realistic basis. The fiscal deficit has to be somewhat on the higher side. We'll see what the government actually presents in the budget. So we'll examine that as it comes.
And if it's closer to 4%, market will say no problem, we understand, and move on, or no?
So the thing is that what we are saying is that while the government would want to expand, it is likely that the pressure will also be there with respect to higher sovereign papers in supply. You will have high government papers, Government of India papers there, and you have this Uday scheme, which will also translate into higher sovereign papers or state development bonds also coming into the market. So I think there will be a significant supply of government papers, and we are expecting in the next 12 months or so the liquidity deficit could really extend, and it is already showing up that you still have a banking sector which is in deficit of roughly about 1,60,000 crores. And I think that would actually extend going forward in the context that governments expand. So I think the rates will be on the higher side, and as a result of that, that's a context that the market could actually take somewhat cognizance of, and hence rate sensitive could actually see a certain correction, or maybe susceptible. But on the other side, the market could actually see the opportunity coming in for consumer sector, especially in the urban areas. So that's more predictable. So the market could take an opportunistic view with respect to what could be more consumption-led and what could be interest rate sensitives. So I think it will be the deep cyclicals that will still be under pressure. Within the banking sector, that is basically the interest rate sensitive sector. You will have valuations for banks that have a considerable asset liability mismatch actually remaining under pressure, and these will be largely in the areas of public sector banks, and also several private sector banks. There are only few banks that have, positive asset liability gap. So effectively, a rising rate would translate into lower margins for the banking, for majority of the banking sector, and also that we'll have to see how much the budget contributes with respect to recapitalization. An ideal scenario would be that the government allocates much more than let's say 25,000 crores that is earmarked for the year. If they allocate, let's say, double of that, that will be an ideal scenario, and that could actually give a booster. But my sense is that that might not be possible given the context that they have other allocations with respect to the salary of government employees, and also maybe a higher allocation for rural and agri that might actually constrain the government. And given the context that you have election, that there will be a clear case of the constraint allocation for the banking sector, which according to me is more desirable and more desirable at this juncture. In terms of priorities, I would give that more weightage. That's an ideal scenario.
Right. In terms of this PSU bank recap bid, what do you expect? A substantial allocation?
Yes.
A banking analyst I spoke to on Thursday said that if a 1,50,000 crore PSU bank recap is not announced for the next 4 years, that's the minimum he wants. 1,40,000, 1,50,000 over 4-year period. He says he'll be extremely disappointed when stocks will sell off big time. There's no case then.
No, so the thing is that under the Indradhanush program there is already an allocation of something like 70,000 crores that the government has actually said, and roughly about 25,000 and 25,000 will be coming in the first 2 years, and the balance 2 years about 10,000 each. Clearly that is inadequate given the context that the recapitalization requirement on an overall basis is much larger, and clearly the government has said that we give you something like 70,000 crores and rest you manage for the markets. But if you consider the valuations of the PSU banks now, that is ranging in the region of 0.3 to 0.6%, 6 times the book value, it will be very difficult for the banks to go out in the public domain and raise money. So effectively, it would be if the government allocates more, and if the government shows proactiveness, let's say if it doubles the allocation, that could actually send a good signal. But the thing is that they will have to front end many of if they have to let's say double it, they have to front load that in this year. So that is something that we'll have to see. And clearly the 25,000 crores that is earmarked is clearly inadequate. And we know that there will be greater provisioning going forward in the coming few quarters, and as a result of that, the net worth of the PSU banks could actually erode. So there has to be a clear recapitalization that has to happen immediately. The other aspect possibly is missed, that we are talking about recapitalization as of now, but whether the recapitalization that you do now is enough to actually address incremental NPAs that might arise thereafter. So I think clearly, according to me, if the government wants to turn around things from a structural and cyclical standpoint, the banking sector issues have to be addressed on a very high priority basis.
Any view on the market, Dhananjay, quickly? I mean, how does the market, in your assessment, will the market rally on into the budget and then take a call,
So my target for the full year was in the region of 7,000 to 7,300. I think it breached below that as well. So I'm not very surprised, because what is now happening is that you have a market multiple which is aligning to the underlying growth, and it is still not complete. So I think the direction of the market could actually be fairly flat, according to me. In the near term, what will be very critical is how the budget session pans out, and given the context of the political development that's happening in states such as Haryana, and also what's happening in JNU and other state, and the implication of these in the upcoming state elections, and how it actually gets presented in the budget. I think in the budget session, whether the budget session is successful or whether it will be a washout again will be very clearly watched by the markets, and I think that's something that we'll have to look at. And as a result of that, I would assume that in the next till the budget session is on and it is through, I think we'll have to watch for the level of volatility that the market shows up.
Dhananjay, pleasure. Thank you very much for your time. Appreciate you joining in with that perspective and chat with you now closer to the budget of the day of the budget itself. Thank you indeed. Dhananjay Sinha there.
Thank you.